Okay. Today's topic is going to be about selling your rate. Okay. It could be titled, "Hey, how much commission you want to make?" But it's going to be about the rate. We're going to do a little role playing. So be prepared to unmute yourselves. Okay. All right. So I'm going to start off first with this question. What is your method? If you have one, what is your strategy, if any, when it comes to quoting the interest rate during a consultation? And if no one, look, there's not many of us here, so it's either going to be on Hyuna or Paul. I will pick on you, but go ahead. Anyone want to share?
What I usually do is I just charge them like a 0.5, and then that's all I want to trying to do.
Uh-huh.
For me right now, I care about volume rather than just profit.
Yeah. Okay.
So and I know people are shopping for rate.
Yeah.
So I don't want later on we might like give higher rates, but
Yeah.
for the consultation purpose, I used to like I just give them like 0.5.
Okay. 0.5. That's a pricing then, right?
Yeah, at the pricing
Okay.
on top of the par rate. Yeah.
Okay. 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 And are you charging a separate origination fee?
Well, if the loan amount is too low and 0.5 is nothing, then
Yeah.
yeah, I need to charge the origination fee.
Okay. Great. Great. Anyone else?
So, what I do, I usually show a recording version of NMSI or Loan Sifter, and I try to show them as much as possible on the first day, so they understand that I want to walk with them and trying to understand with them. And I even offer an option of lender credit on day one. Actually, they relate to the information that I'm going to share later today. That I want to share this, login credential just for the team members joining today. Of course, this will be recorded, so anyone who is watching afterwards will be able to access. But I'll show you, this is how I usually sell, showing everything is telling them how much money I'm making.
Thank you. On, were you going to say something?
Yeah, I was gonna say, similar to Paul on my end, a lot of people are shopping. So usually they come to me and says, "Hey, can you beat this rate?" And of course, either match it or beat it. And usually on the rate, on the pricing end, I'm trying to get at least 1 point on the back, on my end. If not, yeah, like this recent deal, when we opened escrow, she came back and said, "Hey, I just found this online. Can you beat it or can you match it?" Right. And so I had to do it. It was less than 1%, 1 point on my end, and there was a lender credit. So to make the deal happen, I just did it.
Okay, great. Second question. When the question is going to be answered by your client, or it's heading in that direction, do you guys tee up? Okay. Do you guys prep with any material or content before you actually answer the question of what the rate is? Do you guys tee anything up? Or do you go, "Hey, what's the rate today?" And boom, you just say it? Do you guys have any dialogue between saying the rate and either when the question is asked or when you think it's going to be asked?
Depends on the client you're talking to. If they're experienced, I'll shoot them the rate.
Okay.
If not, then I'll say, "Hey, let's have a phone call and email. I'll email you some stuff."
Okay.
I think the Notion has some items that you can kind of use and send out.
Yeah. Okay, good. Now, have you been in a situation where you had to sell a rate yet or no?
Just one. I only had one consultation with friend of mine who's
Uh-huh.
looking for refinance.
Uh-huh.
But Peter kind of walked me through the training before I had a consultation with my friend.
Uh-huh.
So it was all prepared. So
Okay, good.
I
good.
did not really, yeah.
How did it go? How was that experience?
Interest rate is still high for her. So
Uh-huh.
she said she's gonna wait until timing is right. So,
Gotcha. Okay, great, good. So just like I kind of allude this to like dating, right? Or as a man, for the men that's on the call, you're trying to, what's the word I'm looking for here? I hate using this term, but it's like that game, right? You can't just go in on a girl and shoot it and be like, hey, let's go on a date. You probably can. I don't know what your success rate is going to be, right? But rarely will that work, right? Unless you're flashing a dollar sign, a Louis Vuitton wallet, or you driving a super nice car. Just going up to a girl and just being like, hey, let's go out right now. Rarely does that work, right? There has to be a little bit of a drip, right? Girls want to be, women want to be dripped on. Women want to be a little bit teased, right? You got to make them tickle their fancy, as they would say, right? And I think that's very similar to, for me, in my case, when it comes to clients who are shopping rates, okay? I'm not saying I'm a perfect at this, but I would say my percentage, I'm batting somewhere well north of 80, if not 90%. Rarely do I lose a client to because of the rate. The pandemic was different, okay? But throughout my career, about 15 years, rarely do I lose clients to rates. Sometimes it's a struggle, yes, but where I've been at a bank or a direct lender, or here now more so at Giving Tree, I'll probably, again, out of 10, I might lose. Well, I'll for sure lose one, but maybe two, and that's about it. Now, why is that, you think? Well, because I'm teeing them up. Okay, I'm diffusing in their brain what they want to hear, and you're gonna soften that right now, right? So when you ask a girl right off the bat, "Hey, you want to go out with me?" and her answer is probably gonna be no right away. What's the next step? If you like her that much, what do you have to do? You're going to have to diffuse her mind now, right? How do you diffuse it? Well, there's many ways, right? Simply letting her talk. What's the word here I'm looking for? I'm lost for words today. Giving her a lot of compliments, right? Using humor. You want to diffuse that, right? Her no, or her initial thought of what that rate is going to be. And so in the world of mortgage, for me, it's all about highlighting your company first and highlighting yourself. Now, you don't want to go into a 30-minute essay about yourself, but you want to give them to take away why it's important that they are talking to you right now, as opposed to someone else. Okay, so those are what I call highlights. Okay, you want to highlight to them and tell them why it's important that they are talking to you right now, and you want to diffuse, right? You want to diffuse what the rate is right now, because their mind is, I want to just know the rate. And if you give them the rate, the chances of you closing on deal is very low. Why? Because that's what it's on their mind. And if that's what you give them, they're going to go and do that elsewhere too, if they're not happy with that rate. Does that make sense? You don't want to give in to them what they want, simply put, right? It's like the guy that asked the girl, hey, will you go out with me? The girl says no. And you go, oh, okay. And you walk and you're done, right? And she got what she wanted. She told you off. She got what she wanted. It's done. Game's over. Same thing. You do not want to answer the question immediately, what is your rate, Paul? What is your rate? You do not want to. 99% of the time, if you get that rate right away, you're done. You lost. Okay? You guys understand that now or no? Yeah? Okay. You don't want to give them what they want. Okay, you don't want to appease what they're here for. Don't give them the satisfaction. You give them the satisfaction, you're done. Okay, so but how do you do that? You do this, and now you approach it with a very non-threatening manner. Again, giving them reason why they should be talking to you. So so for me, I go. Usually, I start off by saying this. Hey, do you know how many different platforms of mortgages, how mortgages are practiced? Sorry. And you would say what?
No.
No. Okay. Well, there's about 3 different platforms. There's the bank, the direct lender, and the broker. Okay. So now I'm going to feed them information. Okay. First, you're going to catch them on, oh, I don't know. As soon as they say no, they're already vulnerable. Okay, you have to understand that, right? As soon as you ask a question, you approach them with a question. Hey, what's your rate? Oh, hey, by the way, do you know how many different types of mortgage platforms there are? Right? And if you wait for their response. Don't answer it. You wait for them to respond to you. And if they go no, they've just now become completely vulnerable. They're on the defending side now. And then you educate them. You say, hey, a bank is a bank like Wells Fargo, Chase. They happen to have a mortgage department within that bank that do mortgages. But they do a lot of other things, of course. Then you have your direct lenders. These are larger mortgage departments, right, that are mortgage businesses. And you can work with them. They do it from A to Z very well. But they're very limited because they're only subject to their pricing sheet. Okay. Now you want to say pricing sheet because you want to get them in, you want them to you want to tell them, hey, they are very limited. And then you talk about the broker. And then you have the broker. I'm sure you've heard of brokers, right? What do brokers do for you?
They shop the rates for me.
Bingo. They go and shop it, and hopefully this broker is going to find you the best rate. Well, here at GivingTree, so now this is your chance to tell them specifically why it's important that they are talking to you. Okay. And really, my confidence, so I've been with GivingTree now for 2 years, guys. And my confidence working here, okay. So regardless of what you guys think, this is my little plug here. And Peter doesn't know this. You guys should be honored that you were working at GivingTree. Okay. If you didn't like that one, Peter. Okay. The reason why I say that is because there's not a lot of lenders out there, guys. And even for you, Hyuna, just to know, I know you're new to the industry, that has this kind of platform where you can shop with many different lenders. So I explained that to them, right? And that at GivingTree here, so this is usually my spiel. So let's pick on Hyuna. Hey, Hyuna, look, it's a great opportunity that I have, chance to talk with you, and really the opportunity is on you as well, because at GivingTree here, we are what's called a hybrid, a non-delegated correspondent direct lender, and they're going to be like, "What the hell is that?" Right? But you want to do that, okay? You want to confuse them and take them off their track as much as you can. I've learned that is very, very crucial. Okay. And then you explain it to them. He's like, hey, do you know what that is? I know that was a lot, but do you know what that is? Well, look, so let me explain it to you. So you have your banks and you have your direct lenders and then you have your brokers, right? So at GivingTree, we have this really, really unique capability of being a hybrid of both. So when you work with a direct lender, unlike a broker, okay, we control the file from A to Z. Okay, we take your application, we process it, okay, and we go take it all the way to closing. We draw our own docs and we even fund it. The only thing that we don't do is we underwrite it. And there's a reason why we don't underwrite it. The reason we don't underwrite it is because, like a broker now, who's able to shop your loan with 5 or 10 different lenders, and that's key right there. I want you guys to note that 5 or 10 lenders, and they're going to buy you the best, find the best rate. We at GivingTree, we're able to do that for you as well. But unlike the broker who doesn't have control over the file from A to B, you want to call and say, hey, what's the status of my loan? The broker doesn't know. The broker is going to have to reach out to that lender to find out. We can tell you how it's going right away because we are in control of the file, right? But like a broker, we can shop your rate as well. It's not just 5 or 10 though. We work with nearly 40 different lenders we can shop this with. How's that sound? And they're like, wow, that's amazing. Why don't more lenders do it? And I tell them why. This is where I kind of beef up our owner, right? Peter, right? And I said, this guy's a really smart guy. And this guy has, he's got investors, whatever. You can make that part up. But the part is that you want to highlight the difference, the differentiating platform that GivingTree offers. Okay? I'm going to take a moment right there and pause. Does anyone have any questions, or does anyone want me to go over the differentiating factor of a bank, direct lender, and GivingTree? Do you guys all know the difference between the three now? Do you guys know, Hyuna, do you know the difference between a bank and a direct lender and a broker?
You just explained.
Yeah, I did. You understand it? Yeah? Paul, you too? Okay, good. So again, and I'm just, even if you say yes, again, I'm going to highlight a bank. They have a mortgage department. Okay, a bank is not a mortgage company, guys. A bank has a mortgage department. So I specifically say that they are a mortgage department, as they do have checking and savings insurance, and they just happen to do mortgages. Okay, it's not their bread and butter. They only have one rate sheet, and that's about it. Like you guys are used to right now going on Loan Sifter and seeing all these different companies, right? At the bank, there's no such thing. They have a pricing engine and that's it. It's just one pricing. That's it. Okay. And most banks don't broker either. You don't have the option to broker out to another company. They want to keep it within the bank. Okay. A direct lender is a mortgage company. That's all they do, unlike a bank, but they're very limited. Most lenders are limited compared to GivingTree. Right? They have more than a bank, but they may have 5 to 12. I've worked for now 4 different, very large and one middle-sized direct lender. They only have about 5 at most to 12 different options. Okay, and there's always going to be a preferred one. Okay, the preferred one is the channel that the direct lender has the largest account with. Okay, and I would say 65-70% of the time, you're going to go with that one wholesaler at a direct lender. Okay, whoever that is. Okay. But then again, the difference here at GivingTree is that we have the best of both worlds, being a broker, okay, of pricing and shopping, but as a direct lender, that we have control of from A to B, or A to Z rather, right? Gia and Brenda, obviously Romy now who's on board, and then our VAs with Chi and Joanna and others who help us control the file from origination all the way to funding, right? A broker doesn't have that ability, okay? So you want to highlight that, okay? That is probably 75% of what's important, okay? We can, if you'd like, one-on-one, you could call me afterwards and we can go through this a little bit more in detail, or it's just really practice. But for me, I've got it down pat. And what happens is, at the end of my little spiel, I have a customer that's very diffused. They've been diffused from their pride and their, oh, what is the rate? I want the best rate. They've been diffused. Because why? I provided them a lot of information because they've had to themselves diffuse themselves because of things that they couldn't answer, or they didn't know what the different mortgage platforms. They didn't know what a non-delegated correspondent direct lender is, right? They didn't know these things. And then you overwhelm them with, wow, how much GivingTree can offer, okay? Any questions before we move on? And hi, I see a Freddie Marquez on. Welcome.
Freddie, if you don't mind, can you unmute yourself and introduce who you are?
Hi guys, good morning. Sorry I jumped a little too late. Yeah, Freddie Marquez. I just joined you guys. New to the company, but yeah, just wanted to be part of the team meeting.
Awesome.
I was in the mortgage business before, so I'm a comeback, but just here to learn. I'm gonna be applying the world today, just trying to get as much information as I can.
Right on. Well, welcome, Freddie. Pleasure to have you.
Thank you.
So yeah, so the tee up, right? It's like, again, you need to be able to do that, right? For the guys here, right? And I'm sorry, girls, but for the guys, you're going after a woman, right? You don't just go in hard and hot, right? Rarely does that work. You got to tee them up, use humor, right? Crack a joke, right? Make fun of her, right? Get her to diffuse herself a little instead of, oh, who's this creepy guy? I'm going to say no to them. Same thing in mortgage. Okay. You got to tee up, right? You got to diffuse them, provide them good information, overload, crack a joke, whatnot. But really, you're going to overwhelm them with why they should be talking to you right now. Okay, because Bank of America, Wells Fargo, Chase, Citibank, and U.S. Bank, the top big six, right? They can't do what we do, right? They can't shop the rates for you. They don't work with 37 different brokers. Okay, they don't do that. Okay. Direct lenders, right? They can shop the rates, but they don't have nearly as much. And direct lenders, they're not working off of wholesale rate sheets, right? Brokers are. Direct lenders are not. Why are direct lenders not working off of wholesale rate sheets, Paul? Do you know? So even though direct lenders have 5, maybe to 12 different lenders that they can use, why are their rate sheets not better than ours? Anyone want to take a guess? On?
Overhead.
Bingo. Overhead. Like I said, a bank has a mortgage department, but a direct lender is a mortgage business. But for that mortgage business to operate, right, it operates very similarly like a bank. You have your loan officers, your assistants, you have your sales manager, you have your branch manager. And I don't know about now because I've been out of it for a while, but the bigger companies have what's called regional managers, market managers, you have your divisional managers, and then yeah, you have your VP and so on and so forth. You have all these layers of management. Now, a lot of them are flatlining now, or they're getting rid of a branch manager, they're getting rid of even a market manager, and now a divisional will see like all of California, and they have branch managers, and that's it. But still, that person still needs to get paid, right? And then the lights, right? A lot of you see like Cash Call, Quicken Loans, New American Funding. I mean, there's a lot. You see them on the billboards on the 55 freeway, right? They have to keep the lights on. There's insurance. There's a lot of things that they have to pay for. And so their pricing sheets are not wholesale pricing sheets. These are not the raw sheets that you see. As a loan officer, I look up Loan Sifter or their pricing sheet. It's not going to be the same as ours on the broker side, right? And that's the beauty of being a broker now, right? Because we get to use the raw wholesale rate sheet, right? Which is going to be a bit better than the padded rate sheet of a direct lender. So know that. So be empowered right now. As I'm telling you, I hope you guys feel a little bit more empowered being at a platform like GivingTree. Okay. All right. Number 2, the second part of this. Before again, I go into telling them the rates. I like to do a little shopping around for them. Okay. So what I like to do is I'm going to bring this up. Okay. So I like to use Wells Fargo because Wells Fargo posts up their rates very, very easily. And let me get on Loan Sifter too, just to kind of show you a side-by-side comparison. And hopefully there is a benefit. Okay, so let's go ahead and share my screen. Okay. So you guys all see that? Okay. If you go on to wellsfargo.com/mortgage/mortgage rates, okay, you will see the rates. Okay. If you click on it, the 30-year fixed rate, hold on, let me get something myself. Oh, can someone? I got kicked out. Can someone give me the code for Loan Sifter if anyone's on it? Gotta verify myself again. Does anyone have the code to Loan Sifter?
Give me 1 second. Code is 341850.
Thank you. Okay, so if you're looking at what Wells Fargo is pricing out right now, it's a 6.75. But this is the important part, guys. Okay, I don't know if you guys have been taken through this, but whenever you guys see an interest rate followed by an APR, okay, the APR is for you as a loan officer, it should be an indicator of if there are additional points that the lender is charging. Okay, so I'm going to say that again. If the APR should be an indicator for you of whether or not the lender is charging additional points. Okay, when your APR is 1.5 to 2 to 3 tenths larger, okay, like this one here, it's showing 6.75, but the APR is 6.9, which is about 15 tenths, or how do I say this? 15 basis points higher. That just means that there is probably points, as indicated to the right here, points that the lender is charging. Okay. If there aren't any points, this APR will be less. It'll be closer to the interest rate. Okay. So it's just a note for you guys, or it's just something for you guys to note. Okay. Now, what I'm going to do is I'm going to do a very vanilla pricing. I'm going to price out a Loan Sifter, something very vanilla or very similar to this one here, Wells Fargo. It's a $400,000 purchase price. We'll do 20%. Okay, primary, submit. Okay, so this is great. So this is going to work out really good. We're just going to use the one that first came up. So let's show this. So here's a pricing right now today in Loan Sifter for something very similar. It's $320,000 loan amount, purchase price 40%, or purchase price 400,000. Sorry, that was wrong. I just put 80%. I do apologize. I put 20% or 8%. Submit. Okay, but it's still fine. Okay, so we're gonna go ahead and use I guess Rocket. Okay, Rocket has pretty good pricing nowadays. So with Rocket here, if we go to match Wells Fargo, we're at the 6.75. That's a rebate of 70 basis points. You guys see that? 70 basis points. Okay, so remember, you're getting a rebate of 70 basis points, but Wells Fargo was charging a whole point, 100 basis points, a 6.75. Did you guys all catch that or no? Yeah. Okay, so we're working with basically 170 basis point delta here. Okay, that's what you're working with. Okay, so here you have one of two things that you can do. You can match them if they want to match it, right, at 6.75 and still charge them the 1 point like Wells Fargo is doing, knowing that you're going to make 1.7, or you sell it a little bit cheaper and say, hey, I will give you the same rate. Wells Fargo is charging you a point. I'll just charge you a half a point, and you're still going to make 1.25. Does that make sense? Okay, so here's my rule of thumb. My rule of thumb is, okay, let me first put a disclaimer. I don't know what your expectation and how much you want to make in this business is, okay? But for those, if you've been around those who, like in the 80s and 90s and even 2000s, that used to make, say, they made 2 points and 3 points, you can, but in today's market, when it comes to selling conventional loans, okay, you're going to be hurting yourself if you're trying to make anything closer to 2%. That's my opinion. You can disagree with me, but in today's market here in Southern California, primarily Orange County, if you are trying to make somewhere closer to 200 basis points, you are failing yourself. Okay? There's too much competition here in Southern California. There's loan officers are a dime a dozen. There's always going to be someone that's willing to discount and cut. My expectation is to make about 100 basis points, if not a little bit less, like 75 basis points. If your expectation is to make 75 to 100, if you lose a deal, you're just not selling it correctly. You're probably just answering their question. Okay, so case in point here. Going back to this, okay, going back to the pricing. If I just sold this and said, hey, Paul, you know what? I'm going to do you better than Wells Fargo. I can give you that 6.75 without charging you a single penny. Right here, you're going to make 75 basis points, okay? Or you can say, you know what? If you're willing to pay that 1 point, then you sell them at a 6.75 or a 6.5, right? The pricing today is not that great, obviously, because of what the market is doing, but tell them, hey, if you're willing to pay that, I am willing to give you a lower rate, right? Because knowing that your expectation is you're going to make 75 to 100 basis points, okay? I personally go in when someone tells me what the rate is. Okay, what I always do is I take what's closest to par, and I typically go 200 basis points. That's how I start off. Okay, if this person is very green, doesn't know much, they're just like, oh, Ragnar, I was told to give you a call, or I was referred to you by my agent, so on and so forth, and I did the whole spiel. I did the setup, okay? I'm going to start closer to either 7.25 or 7.125, okay? In this case, in today's market, I'm probably going to start at 7.25 just because the rates are higher and everyone knows that the rates are higher, and I'm going to work my way down it. Does that make sense, guys? So I will say, hey, Paul, today's rate, ongoing rate is about 7.25. How does that sound? And I'm going to let them talk. And then I'm going to say, look, again, that's the ongoing rate, depending on their reaction. Okay. Paul goes, oh, yeah, I heard like rates were like in the 8s. Like, it's not. Dude, if she says something like that, if that client says, oh, I thought it was like high 7s, I heard it's going up really high, I'm locking them in. Okay. I'm locking them in right now. If Paul was my client right now and got into ESCO and we had this call, I'm locking them in. I'm making 200 basis points. Okay, because I also know that the rate's probably going to go higher anyways. Okay, now if the Paul goes, oh, I thought the rates were like in the 6s. That sounds a little too high, Ragnar. Then again, I'm going to say my response is going to be, well, again, that's the ongoing market rate without any points. Okay, you always want to help diffuse the point. You have to use something, an element, to diffuse, to make it sound better than it is, right? Because there's a lot of companies out there that already are quoting the rate charging points. And so you want to make sure, hey, yeah, this rate might be a little bit high at 7.25, but it comes with 0 points. Okay. But Paul, like I said, that's the ongoing rate right now in the marketplace. But because you're working with Giving Tree, again, I'm able to broker this out and shop for the better rate, right? You have to be able to have these transitions. So then I'm now telling myself, okay, because I start off at 200, I have about 100 basis points that I can work with to try and make Paul happy now. Okay, so now I'm looking at it and I go, oh, here it is. Hey, I found a lender that's at 6.99. How does that sound? If she says, or if he says, that sounds much better than a 7.25, then great. Do you want to lock this in right now? Do you want to move forward? If they don't, then you keep playing with it, right? You go down, okay, let me see if this lender, oh, but Paul, we can go with this lender. There is one other lender right now that's pricing lower at 6.875. It might entail like a quarter point, but honestly, the turn times are pretty slow. I use them once in a while. My experience with them isn't the greatest. It's kind of like, you get what you pay for. Which would you like, Paul? Would you like to go with the 6.875? They're going to charge about a quarter, which is not much. It's a couple $100. Or would you like to just settle with the 6.99? Or not, you wouldn't say settle, sorry. Or is this a 6.99 with no points? And this is a major company, Rocket Mortgage. You've heard of Rocket, right? Or you can go with Rocket. And you give them the two options for them to choose which one. 9 out of 10 times, that's how I work. 9 out of 10 times, this is pretty much exactly how my process flow goes. I give them the options. I will say 50% of the time, they're like, you know what, that's a good rate. Let's lock it in. Okay, because again, they're already diffused. Again, it's like when you crack a joke with a girl, right? And you make fun of her and you tell Joe, and she's like, oh my God, this guy is so funny, right? And you go, hey, how about I take you out for a drink next Saturday? What do you think her response is going to be at that point? It's probably going to be more closer to a yes than it is a no if you've done the setup correctly, correct? Instead of that guy that just says, hey, let me take you out for a date, or will you go out with me? The likelihood of her saying yes is going to be significantly higher if you spend time with her, setting it up, teeing it up, showing how funny, charismatic you are, right? She's going to probably think, even if she doesn't think you're good looking or whatever, she's going to probably think, oh, he's so funny. This guy's so fun to hang out with, right? And she might give you a shot. It's the same thing here, guys. If you set up properly, okay, and if you diffuse her of her, what the rate is and her stubbornness and all that, then the likelihood of her at this point willing to accept something is going to be higher than not. Okay. Now, even then, to the very end, you guys, don't make the decision for her, though. Let her make the decision. Always give an option. Never, ever, ever, never, ever just quote a rate for the sake of quoting a rate and telling her what it is, or telling your client what the rate is. You always want to give her at least two options. Okay, so in this case, it's going to be, again, Paul, I found the lender right now. We can get down to about 6.99, which is definitely better than 7.25. It'll save you about $80 a month at 6.99 with no points. Or, again, I have another lender here you can go with. They are offering a 6.875. It might be about a quarter point, just a couple $100. But again, the caveat is, my experience with them hasn't been the greatest. We can probably get it closed, but their underwriting is a little bit tighter. They're a little bit slower. They're less of a no-name lender. That's why they're offering you a better a rate. Or else you can go with the 6.99 Rocket. Everyone knows Rocket. They're one of the top 5 largest lenders in America. What do you think, Paul?
Yeah, let's go with Rocket.
There you go. See, I didn't say anything. And I could have been on this call for 30 minutes and I would not say anything. The ball is in Paul's court, not mine. Never answer the question for the person. Okay. And if you want, repeat it again. Again, Paul, it's how does 6.99 sound with Rocket? The well-known Rocket, or 6.875 with I don't know, AmWest funding. Let's call it AmWest funding, but it really is Rocket, guys. Okay. Or AmWest lending. Let them choose. Okay. And again, with 6.99, you're still making 135 basis points, right? 135 basis points. If you're expecting to make more, you're in the wrong. You're really asking to be like defeated, okay? Because in the Orange County market, if it's, again, this is just for conventional guys. The selling for non-QM loans out of state is a little bit different. Actually, I would say a lot different. But when in the space of conventional loans, which probably most of us do on a regular basis, this is for that. Okay, you don't expect to make more than 125, 150 basis points, unless the pricing is very rich, right? The bond is recovered well, it's retracing. Then maybe there's a lot of pricing where you can sell it well. Like I sold a conventional at a 1.875 the other day that I just closed. Right? You can do it. Pricing was a little good when they locked it in. But you should anticipate to make about 125, 100 basis points. Okay, don't get too greedy with this, like Paul said, right? It's about volume. You want to close these more than lose these right now. Does anyone have any questions? Another bucket, again, GivingTree allows you to make money in different buckets, right? So there's also the admin fee and the origination fee, right? Let me address that real quick because I know I went a little bit over here on time. When it comes to the bucket, okay, I always, and I tell Gia this, and I don't know if she likes this or not, I always charge, or I try to charge, origination of $2,000 and admin fee of $695. Okay, the reason why I do that is because when it comes to locking the rate, okay, I'm going to do a change in circumstance, CIC or COC, and I'm going to remove the origination fee of $2,000. It's my way of showing them, hey, I'm here for you, and I'm going to do you a favor, and I'm going to remove this origination fee of $2,000. Does that make sense? Right? So I always disclose, or I try to disclose $2,000 all the time up front. And then afterwards, if they're feeling a little, oh, I found a better rate, or just you want to do, you just want to make them feel a little bit better, right? You remove the 2,000, say, hey, by the way, Paul, I just sent I sent out the revised LE to you. If you can acknowledge it, you'll notice there that we locked in the rate, okay, at 6.875 or 6.99. And by the way, I just really appreciate your commitment to GivingTree and to me, and I want to go the extra mile for you. So I went ahead and I actually just removed the origination fee of $2,000. Think about how that's going to make them feel. That makes them feel great. That's it. It's $2,000 extra that they get to keep in their pocket. That's what they think, right? So, excuse me. Obviously, the rebate or the admin fee, you can keep it or not. More often than not, I keep the admin fee. They don't complain about it. That's an additional $695 that's in your pocket, okay, which is a lot of money, right? Even at 75%, that's $500 extra that you wouldn't have. So keep that. But that's how I go about selling this. You got to have your tee up. You have to diffuse them. You have to give them reasons why they're fortunate enough to be having a conversation with you, because GivingTree offers this, and this, right? It's your elevator pitch for GivingTree. Then you show them side-by-side comparison of rates between Wells Fargo and your pricing. You could use other ones too. Quicken Loans is a good one that you can use. Here, let me show Quicken Loans real quick. Everyone knows Quicken Loans, right? They spend a lot of money on advertisement. Okay. Let me show you Quicken Loans. So if you go to quickenloans.com, right, go to mortgage rates, look at their rates they publish. 30-year fixed rate, 7.125. Okay. Believe me when I say this, especially if you are selling out of state, okay? If you're selling out of state, everyone knows Quicken Loans. Why? Dan Gilbert. Anyone want to know who Dan Gilbert is also? Who watches basketball? NBA. He's the owner of the Cleveland Cavaliers, right? Quicken Loans, Quicken Stadium. Everyone knows Quicken Loans, especially west or east of the Mississippi River. Everyone, okay? But look at their rates that they disclose on their website, 7.125. And look at their disclaimer. I love doing this, guys, right? So Wells Fargo obviously was a lot more clear. They showed the points right there on the right column. At Quicken Loans, I'll go through Quicken Loans with them, right? And they go, hey, borrower, just look at this. Click on the disclaimer. And it says an interest rate of 7.125 is for the cost of 2 points. They spell it out there, but you got to click it though, right? And when you show this to a client, that's another way to diffuse them, make them very vulnerable to you, the loan officer at GivingTree. Okay? Because you're going to quote them a better rate, as well as you're going to not charge them these points. Okay? So pick a few. Like I just showed you these right now because literally these are what I use on a daily basis. Quicken Loans, Wells Fargo, even Rocket. If you actually take them to the Rocket website, Rocket Mortgage, they do post their rates, and it's usually not, in my experience so far, it's not better than our wholesale rate sheets that we use. Okay? I'm going to stop there. Anyone have any questions? No? Good? Helpful, guys? Yeah? If you want to have like a little one-on-one and we can go over this, please, guys, my phone's always available to you guys. Don't hesitate to reach out to me. Before I give it over to Peter, just take a quick look, guys, here. Right here up on the URL, Rocket mortgage rates. Look at their rates they're selling. They're selling because Quicken and Rocket's the same, right? They're also selling 1.25, right? So again, when you guys are telling them, hey, we work off of wholesale rate sheets, you guys are able to prove that to them, okay? All right, thank you, guys.
Thank you, Ragnar. Hopefully, today's session helps you to understand how to engage with your clients and realtors.